Stocks build on gains with metals, telecom and IT being the prominent drivers today, even as financials are the key drag. Midcaps fare better.
The draft RBI rules require banks to sharply increase liquidity coverage on deposits from next April. Bond yields fall to multi-year lows on expected higher demand for bonds from banks to maintain the liquidity cover.
Mankind Pharma pips others to buy out Bharat serums and vaccines from Advent in a deal worth 13,630 crore rupees. The acquisition will position Mankind as a leader in women's health and fertility in India and give it an entry into the critical care segment.
And Tech Mahindra slips despite a healthy performance and a good start on the company's new strategy as investors turn skittish on valuations after the recent rally.
Hello and welcome. You've tuned into Business Lunch on this Friday afternoon. I'm Nisha Podar and with me as always is Hormaz Patakia. So Hormaz, today the market is lifting off the pressure of the various events that it has really digested over the last few days, and case in point being the union budget and all of it digested. And also today Finance Minister was right here exclusively on our network, and a lot of clarifications and confirmatory and futuristic outlook really is giving a lot of comfort to the market. At the present moment, Nifty 50 at the high point of the trading session, 1.3% up in trade with gains over 300 points at 24,730 levels. Hormaz, clearly, I have lost count of how many times each day we are breaking records. So it's become a norm now for the Indian markets. But looking at the overall market, it's a bank Nifty which is, underperforming the key indices. And banks are, remember, the key areas with which, investors play with the economy and take a bet on the overall economy.
Banks indeed are the underperformers in today's session. Just this morning we asked this question. The dips all through the week were getting bought into, but do the bulls have a conviction to take the Nifty back to those levels which we saw last Friday? Yes. I guess the answer is a resounding yes, if you can see from the screen. But what's leading the gains there? It's the IT pack that is leading the gains, both Infosys and TCS being contributors to the upside. Then Infosys is now at a 2-year high now, almost at levels of 1880, and that is now heading towards its record high which it had hit in March of 2022, which is at around 1900 levels. TCS also trading with gains of well over 2%, but the banks have also now moved into the green, by the way, but compared to the benchmark index they are still underperforming, and that is also because of some news flow that has come in there. You can see the Nifty Bank now back above the mark of 51,000, 0.4% higher. It's a significant recovery from the lows of the day. But the start of the show, then the RBI will be increasing the liquidity coverage ratio for banks. These are draft rules, but the expected demand for bonds has already pushed up bond prices and brought down yields. Now, what do the new liquidity coverage rules mean and how will they impact the banks? Lata Venkatesh is here with an explainer. Lata, good afternoon.
Well, basically, liquidity cover means keeping more money as pure cash or nearly cash instruments like government bonds. That is what the liquidity cover ratio means. What banks are required to do by Reserve Bank is that they have to estimate how much deposits will flow out in the next 1 month. And that has to be kept as liquidity, as government bonds, which can be easily liquefied. This rule always existed, but now banks are requiring more liquidity because of internet banking. I mean, at time was when you would only withdraw money from ATMs and use it through the month. But now, on a daily basis, anyone can be paid minute by minute through UPI, and that means the banks are having less of immediate liquidity or more demands on their cash, and hence these rules. What Reserve Bank has said is that for stable deposits, where those deposit accounts where people are not withdrawing too much from their current and savings account, the banks had to keep 5% of that as liquid, government bonds. Now they have to keep 10% because more withdrawals are happening. And for less stable deposits, people who are inclined to pay from their savings account more often, they had to keep 10% of that in the form of liquid cash or government bonds. Now they have to keep 15%. Likewise, now term deposits are what bankers like very much because you won't liquefy them. For that, you don't have to keep LCR. But if the term deposits have been used by some small unit as collateral to borrow, then those will have to be treated as retail deposits and you have to keep the same 10 or 15% as government bonds as a percentage of those deposits. Now, besides all these rules, the valuation of bonds also has been tightened a bit. People used to value the bonds at face value. Now they have to value at the current price, which means, again, there could be more bonds that you have to top it up. What is the impact? If more of the money of banks is kept idle, not exactly idle, but only in government bonds, the return is what, 6 to 7%. If they lend it as loans, say credit card loans, they would get, many times that, at least double that. So if you keep more cash in government bonds, your margins are crunched. Also, you will go hunting for more long-term deposits. So deposit costs go up and again, margins are crunched. So there are some calculations. Jefferies is calculating that about 4 to 10% impact can come on banks' earnings. It really depends because public sector banks have a lot more government bonds than they need to. So they may be in less of a haste to go and borrow expensive. It hits different banks differently. But the biggest impact, you will not believe, is happening on government, on bonds. Because if you just do a plain vanilla back of the envelope calculation, if all banks have to increase the amount of government bonds by 10 to 15 basis points, it will mean nearly a 5 lakh crore demand for bonds. Okay, some of them already have extra bonds. You bring it down to 2.5 lakh crore. Still an extra demand of, 2.5, 3 lakh crore of bonds. What is the net government borrowing program? It is about 11 lakh crore. You're creating demand for about 30% from next year. So the real impact is on bonds, and already today the yields have fallen to 2-year lows.
All right, Lata, many perspectives and a lot of takeaways from your explanation and on this big development. But one big takeaway for me is that we are more formalized in the transactions on online setup. And trust me, I'm paying everybody on a regular basis on online through UPI. So that's a very big difference, and therefore many changes in the rules as well. To discuss the impact from RBI's draft norms on liquidity coverage ratio, we spoke to Satyanarayan Raju, who's the MD and CEO of Canara Bank. Listen in.
Our liquidity is for existing. We are very much comfortable. We are at the range of 135 to 140. That's the existing liquidity what we are maintaining it. What the guidelines yesterday our regulator has issued, we have assessed roughly in the morning, and it is impacting 10 to 11 basis points. I don't think that will have a problem for the Canara Bank, because even after doing all these things also we will be more than 120-125%. So I don't think it impacts our credit growth or CD ratio or anything.
Well, from banks, we move to a big deal in the pharma space, and Mankind Pharma will acquire Bharat Serums and Vaccines from Advent International. Rachna Dhanrajani, who had first reported on this deal on the 14th of May this year, is joining in with the details. Rachna, tell us more.
Right. It was on May 14th that we first reported that Mankind will buy 100% stake in Bharat Serums and Vaccine from Advent International. And now the announcement has come in from the company. In fact, it came around late last evening. Now the deal value of this transaction is pegged at around 13,600 crore. But there are two things that we're closely looking at. One is a question that how is Mankind Pharma planning to fund this acquisition of Bharat Serum and Vaccine? So we've learned from our sources that it's going to be a split of debt and equity. Now let's go back to our report on May 14th, after which the company had announced that they will be doing a fundraise for 7,500 crore rupees of equity. And now our sources have confirmed that the same equity will now be used for this deal and the remaining will be for debt. Another thing that we're closely looking out for is the integration. Now, of course, Bharat Serum and Vaccine has been a market leader when it comes to women, critical healthcare for women and fertility drugs. And now Mankind will be stepping up with this integration. So that's something that we'll be closely looking out for, as well as the street will.
All right. Thanks so much, Rachna, for all those details, and many congratulations on the news break. With that, we'll slip into a short breather on Business Lunch. But when we return, we'll get you excerpts from the Finance Minister's conversation from the open house today. Stay tuned for that.
Back with us here on Business Lunch, and now days after presenting the Union Budget, Finance Minister Nirmala Sitharaman said that taxes have not been increased because the government wants more money, but to ensure that all asset classes are treated similarly. Now, speaking at the Budget Open House organised by the RP Sanjeev Goenka Group in partnership with CNBC-TV18, she also justified the government's decision to remove indexation benefits for real estate. Listen into what she had to say.
At least I can tell you under Prime Minister Modi, nothing done is done just with the back of the envelope calculations. We go through rigorously. We talk with people who are concerned in this areas. And only then, not for revenue considerations, I underline that. More for ease of doing business, more for simplification, more for rationalization. Have we brought changes in the tax? It's not been increased because I want more money. And it's not been increased for everything. Every asset class has to be treated similarly and nothing more. We'd like to be sure that the public spending actually does the job of bringing public infrastructure and bettering it as well. So it is not a temporary solution that we thought is required post-COVID. India still has infrastructure deficit in some parts of the country. Infrastructure still has a lot of work to do. So I wouldn't be in a hurry to say, can I shut that shop? No. So, of course, that doesn't mean we'll keep doing it and we'll not have a view on private sector investment. We will want that to be ramped up, there's no doubt.
All right, some important comments coming in from Finance Minister Nirmala Sitharaman. And with that, we'll slip into a short breather on the show. But when we return, we'll get you more updates on news developments as well as market action. Stay tuned to Business Lunch. Welcome back. You're watching Business Lunch. Now, the state of Karnataka passed a Cine and Cultural Welfares Bill, levying a 2% cess on all TV channels and OTT platforms. Now, the cess also seeps into cinema ticket sales and any entertainment revenue generated within the state. That's a big one for media and entertainment. Ashmit Kumar joins in with more details on this new cess. Tell us, Ashmit, who stands impacted and the move by the government and the state government, as well as the feedback?
Well, the intentions of the Karnataka government appear to be very noble, to set up a welfare fund to address the needs and provide social security cover for cine and cultural activists. The way they've gone about it, however, has raised many questions. By way of this bill, it was passed by the lower house of the Karnataka Assembly on Tuesday. Last evening, it was passed by the upper house. Now it is awaiting the assent of the governor for it to become a formal act. But what it seeks to do is to levy what it calls is a welfare cess. Now, this welfare cess will be levied on movie tickets, on multiplexes, on TV channels, and importantly, OTT platforms. Now, cinema and multiplex, one can understand, but the question of TV channels and OTT platforms is what has raised many eyebrows. Number one, the question that has been raised is that, is this really the remit of the state government? Does it have the legislative competency to levy a tax on an issue that is already seeing the levy of GST? This, in fact, we spoke to some of the industry leaders as well. What they also tell us, they're raising the question of double taxation. Is this a case of a double taxation? Since GST is already being paid on any subscription amount that may be being paid to an OTT platform or a TV channel, is this a case then of double taxation? There is also the question of how do you designate or attribute a revenue, a portion of the revenue, to a specific geography. These are many questions being raised, especially now that the Karnataka government, the Karnataka Assembly importantly, has passed this bill. Welfare cess of 2%. Representations importantly are already going to the leadership at the state government level as well as to the governor.
Ashmit, thanks a lot for that update. Time for a short break, but as we do that, today India is marking the 25th anniversary of the Kargil war victory. 25 years ago on this day, the Indian Army won the Kargil War, reclaiming territories in the districts infiltrated by the Pakistani Army. Now, every year, the Army pays tribute to the Jawans who lost their lives defending the country. Prime Minister Modi also visited the Kargil War Memorial in Dras today and paid his tributes to India's brave heroes. He said that India has defeated terror in Kargil and that the Army will continue to fight terrorism. Welcome back onto the world of sports. Then the biggest sporting extravaganza, the Olympics, begin today in Paris with an opening ceremony by the River Seine. A total of 117 Indians are participating in the games ahead of the opening ceremony. Mangala Malu spoke with one of the biggest benefactors of the Indian sporting community, Parth Jindal, the founder of Inspire Institute of Sport, and asked him about India's aspirations from Paris 2024. Listen in.
Very difficult to predict medals.
Yes,
obviously, it goes on to, they have to qualify, then they go into the Olympics. There's a lot of pressure. But I think never before has Team India been so well prepared. I think the government has put a tremendous amount of impetus, and there's been a lot of collaboration between the private sector and the government in preparing this contingent. So whether it is the Sports Authority of India, whether it's the Target Olympic Podium Scheme, whether it's the Indian Olympic Association and the Sports Ministry, I think everyone has worked collectively to give our Indian athletes the best chance. I think, Tokyo, we won 7 medals and our shooters didn't get a single medal.
Yes.
This is going to be our largest ever contingent of shooters going to any Olympic Games. 21 shooters are going. We also have a very strong archery team going. Again, archery didn't bring back any medals in Tokyo. So I'm optimistic. I think double digits, I wouldn't settle for anything less than double digits. My own count is about 12. 12 to 15 is where I would be thrilled if India gets to, but anything less than double digits, I would be disappointed.
All right, and since you are very closely associated with all sort of sports, more so with the quest for gold in Olympics, etc., can I pin you down for hopes of the yellow medal this time around? I mean, last time we did 1. How many this time?
So again, it's very difficult
yes.
to predict, but Neeraj goes in as the favorite.
Yes.
There's no doubt about that. Then we have a chance in boxing as well with Nikhat Zareen.
Yes.
She has a shot at a gold. In my book, Vinesh Fogart is another one who is, although the Japanese are extremely strong, but we would be expecting Vinesh to put up a very strong fight for a gold. And shooting, I mean, shooting, we have world champions, we have world record holders going. So I don't know, let's see, but I hope it's more than one.
All right, so interesting conversation there and cheering for our brigade for the Olympics this time. And as we end this edition of Business Lunch, here's a special announcement for all our viewers about an exceptional evening where we are honoring the heroes of India's economy, a prestigious ceremony where we are celebrating the SME champions who are building our nation brick by brick. By the $5 trillion economy on the horizon, we must acknowledge the heroes are small and medium enterprises. India's one of the coveted SME Awards platforms is here to recognize, honor and celebrate the builders of India's economy. HSBC presents CNBC-TV18 SME Champion Awards is all set to finally announce the winners today. 5:30 p.m. onwards. Don't miss it. Thanks so much.